Let's get across the market open now. David Lane joining us from Odd Minute. David, good to catch up with you on this Hump Day Wednesday, and that rally sort of continuing, particularly in the US, clearly off the back of what we've heard from China and the US.
Yes, you're right, Andrew. We saw the US market, particularly in the tech stocks, rally fairly strongly last night. We obviously saw our market here yesterday. The index itself was fairly mixed, but we saw some wild swings, both on the downside and the upside for China-related stocks. But yeah, certainly in the US, the US exceptionalism seems to be back on the trade, and as well as the China trade truce, there were some announcements out of Donald Trump and Saudi Arabia, which certainly sent the tech stocks rallying.
Yeah, indeed. In fact, Donald Trump, as he does, continuing to make deals. So Saudi Arabia, that's where he's been, looking to get a massive injection of capital, certainly as far as defence spending is concerned.
Yeah, that's right. Yeah, about $600 billion US as far as their initial spending, predominantly, as you said, as far as defence spending is concerned. But then there are also some other deals as far as investments in data centres in Saudi Arabia. Nvidia, the share price of Nvidia rallied very, very strongly last night. It's up about 17% this month. So the market cap of Nvidia is back above $3 trillion. And that's on the back of an announcement that they intend to sell about 18,000 chips to Saudi Arabia as part of that data centre rollout. So yeah, certainly Donald Trump has been, talking up the world, and he told us all that the stock market is going to rise significantly. So obviously the US investors took heed of that.
Yeah, perhaps the stock market is his barometer of success after all, given what we've seen more recently.
Well, maybe he's taking some credit for it now, whereas a couple of weeks ago, apparently it was Biden's market.
Indeed. David, let's refocus on what we're seeing locally. We are expecting a higher open here. Look, interestingly, we've got a couple of updates coming to us, notably from CBA.
Yeah, CBA have announced their third quarter trading update this morning. It was an okay result. Their revenue was, or net profit, I should say, was $2.6 billion for the quarter. So certainly a lot of money. But the increase wasn't that great. It was up about 6% on the previous comparable quarter. Their revenues were up about 1%, but also their costs were up about 1% as well. So it will be interesting to see whether or not the market has a look at CBA once again. The fact that they're trading on a 27 times PE, dividend yield of about 2.9%. Given the fact that there is a lot of momentum in the overall market, CBA might well be one of the places where people start to take some profits and move money elsewhere.
All right. Also, Aristocrat out this morning as well.
Yeah, they've just announced their result. Looks like a very positive result. Revenues were up about 9%, profits up about 12%. And the outlook from the company looks fairly positive as well. So, Aristocrat's done very well over the last 12, 18 months, but probably we'll see a bit more positivity in their share price today. We quite like Aristocrat. We've got an accumulate recommendation on them, and it seems from the early read, the result was quite a good one.
All right. Yesterday we had Life 360 likely to get, well, it's actually those shares jumped yesterday on a better than expected result. It's seeing that growth continue, particularly as far as attracting new users is concerned. Also, what do you see perhaps getting another boost today, given what we saw with tech stocks?
Well, yeah, it's certainly possible. Life 360 has done very, very well. They jumped about 14% yesterday, so they had a really strong rally. And their share price has done well over the last 12 months or so. But given the result, it was above our expectations, above consensus expectations, and there is further growth to come out of Life 360. So given the strength that we saw in the tech stocks in the US, it's possible that we see some further momentum pushing them higher.
Now, David, given that renewed appetite for risk, we have seen some of those defensive plays come off, most notably gold. Those gold miners were smashed yesterday.
They certainly were, yes. A lot of the gold miners were sold off very significantly, some as much as 10%. We've obviously seen a strong rally in gold. The gold price overnight, the futures price was up about 0.8%. Copper price was up about 1.6% or 1.9% actually. So could well be a bit of a reprieve for those gold miners. But definitely, some profit taking there as the short-term uncertainty around the world apparently has come off. But I think it's important to note that the trade truce is only a 90-day pause. We're still not necessarily out of the woods totally.
Yeah, that risk remains. So, I mean, given how far they fell yesterday, do you anticipate that investors are going to see that as a buying opportunity?
Oh, look, I think so. I think there's certainly a view that gold continues to rise, that we still do have a lot of geopolitical uncertainty. There is still inflation around, and if tariffs do remain a part of the future, that inflation is potentially going higher in the US. So, I think there is still a bit of a view that gold will be a positive move, and many of those gold miners are reasonable value when compared to the gold price. So, I think the value buyers could well come into those gold stocks today.
And David, elsewhere, certainly the consumer staples, in particular the supermarkets, have done well as that risk has built. But now that's come off, and as I mentioned there, risk appetite increasing again. What are we seeing among the supermarkets? Also, given perhaps they're engaging in some sort of price war here too.
Well, yes, that's right. There's concerns about that price war escalating between Coles and Woolworths in particular. We did see yesterday the prices of both Coles and Woolies off quite a bit. As you said, it's probably a combination of the concerns about the price war and also money moving out of defensive assets and moving into some more growthier type names. So we could well see a bit of continued weakness in those staples for a while.